Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, March 11th. It's Alissa Coram here. Stocks whippy on the day, but ultimately closing lower as investors digest more tariff headlines and even news on the Ukraine war front. And joining me now to discuss the market action and some stocks to watch is my colleague, Ed Carson. Ed, what do you got going on today?
Yeah, I want to take a look at Verizon, Angico Eagle, and Tradeweb markets.
Okay, well, we'll take a look at those stocks, but we first have to take a look at the major indexes because, we always want to stay in step with the market, and following the index action is the best way to do that. Here's a look at the NASDAQ composite closing down at 0.2% on the day, the least hard hit there. We have the S&P 500, meanwhile, down about 0.75% by session's close. The Dow down 1.1% on the day, but coming off intraday lows there. And the Russell 2000 up on the day, actually headed into the final stretch, up about 0.7%. So, Ed, we're in a market correction. And importantly, too, we did undercut the lows from the prior session. So, we're restarting the clock, as it were, or the count for our potential rally attempt.
Yeah, I'm not sure if we're going to have any pink rally days from
Right.
today, but it really just can't rely on just intraday moves. Like if we had closed an hour earlier, we'd be saying, wow, positive rebound. It almost feels like we're going to get these whipsaws. And so it just happens to be where we close on this roller coaster, but you can see where we're going sharply down. And we're going down so fast that the 10-day line's going down almost vertically, and yet it's still a long way from the major indexes. So it's just not a good condition. We need to see real strength, and it's just not there right now. And it could
Mhm.
be, there's a lot of headlines that are whipsawing that at some point the market may ignore the headlines, even if the headlines seem negative.
Right.
uh, you know but but that's why you really have to look at the market reaction to news. It doesn't matter what you think, it doesn't matter what I think. The market doesn't like what's going on right now. And when the market turns around and shows sustained strength, you want to be ready for that, but you don't want to try to jump ahead of that. This is not a knife. This is a falling guillotine. This is not the kind of things that you want to be trying to catch, and guessing that top, and guessing that bottom.
Mhm.
So that's the situation right now.
Totally agree, Ed. And it's only Tuesday, but the NASDAQ here on pace for 4 weeks down in a row. The last time we did that was last August, but that weekly close on that last down week was pretty strong there. And then if you look going back, around when the market bottomed in late 2022, early 2023, and started rallying, that was another period. But then before that, it was bear market time that we had that big of a losing streak. So we'll have to see. We still have 3 days to go in this week and a lot of potential headlines to come and to sift through. But you're exactly right. The market can move counter to what those headlines are. So you never know. We'll remain open minded. But for now, in cash seems to be a pretty good place to be.
Yeah, absolutely.
And I feel like that also helps you stay open-minded because you're less emotional about,
Yeah.
wanting to hoping for a bounce or dreading further declines.
Yeah, and that's actually a reason against. I mean, I don't short very often, but that's even something to be careful of with shorting, because you start hoping that the market will go
Yeah,
down. So it's like you can hope that the market goes up or hope the market goes down, and you just have to just see what the market's actually doing. And it can be so emotionally draining if you are heavily invested either way, but
right.
especially long in a bad market. You can be so drained, you're just not in good shape for mentally for when the market does get better.
That's absolutely right. Okay, let's check in on the S&P 500. Looks like next stop on the downside is 5,500, Ed.
Yeah, I mean, just a couple days ago, we had held support at the 200-day line, and it just hasn't yet. Hasn't didn't continue. So it's just this is just showing continued weakness.
Mhm. The Dow now below its 200-day line as well.
Yeah, and now it's sort of like basically at the lowest levels in 6 months. One thing is that okay, it lagged a little bit. I think when we first sold off in late February, it was led by these super highly valued stocks that were really strong, and so you saw the Dow outperforming
Mhm.
relative strength wise. But clearly, I think there's more real world economy concerns about what's going to have all these impacts. I mean, it's been broad losses all around. The Nasdaq still fell today, but you're seeing it now in places that had been more resilient.
Yeah. And as you're always great about pointing out, you can have relative strength and absolute weakness.
Yeah,
So,
that's the case here for sure.
okay, let's take a look at the Russell. Any thoughts on why small caps today? Of course, taking a step back, the weakest of the bunch, but today up a little bit on the day.
Yeah, and actually that's still delayed. We had a really
Yeah.
bad close because IWM, which is the ETF, that actually closed flat. So we'll
Okay.
see. The
So never
Russell might
mind.
be fractionally higher, fractionally lower. So that's how much, just from the time
Yeah.
we started talking, it was higher a lot, then it was modestly. And so
Yeah.
so we'll see. That's just the roller coaster we're going. And it's just, there's no bounces are not being sustained. That's the thing. We're getting
Right.
bounces. We've had individual days on all these indexes that have been strong, that where we have strong closes, but that one day just doesn't mean anything. We need just so much more than that.
Hmm. Okay, next on the list, we like checking in on the bond market. Here's a look at the 10-year yield, Ed. What can we glean from this?
Well, it also tells you that the bond market closes 1 hour before the stock market. I got a feeling that I haven't looked at treasury yields from that point, but you can imagine that falling off. But we're still in this little range. We're holding around the 200-day line, so it's not breaking lower. I think if it broke lower, that'd be a real concern. And we did get some positive economic data on job openings, saying there's more job openings. I think there's concerns that was a January number, but at least shows the U.S. was in stronger shape on the labor market heading into February, March.
Hmm. Okay, let's now go to the VIX. You've been helping us keep an eye on the fear index, which is climbing. We did see it by the end of the day edge off a little bit here, but still at relatively elevated levels, though there could be more room to go if the market uncertainty and the market downdraft continues.
Yeah, I mean the thing is with the market, like what does it take for the market to turn around? Do you need a PG-13 jump scare, or do you need a full-on slasher film that terrorizes everybody for hours on end, weeks on end? So I mean, these are secondary indicators. This is
Hmm.
at levels where you start going, well, maybe this could be something. But as you can see, just a few months ago, that was like the yen carry trade, and then if that just momentarily, and then if you go to a monthly, you can see how things spiked. And there's all these indicators. It's like where it went super high in COVID, that kind of thing. Again, nothing like that, but you can see how sometimes certain levels is enough that might indicate a bottom, but other times it does not. So
Hmm.
again, we use the major indexes and leading stocks. This is just sort of like a little flavor, a little spice
Right.
to the cuisine that you're eating.
Yeah, one extra little ingredient there. I like that. Okay, any ETFs you want to check in on, Ed?
RSP,
Okay,
just
let's
because I thought was
try
notable. Again,
RSP.
that's like the Dow, the real world thing. This is
Yeah.
now breaking lower. Again, this was holding the 200-day line. It fell finally yesterday, but not too bad. But now it's clearly below that, clearly below this level. So this is at a 6-month low. Again,
Mm,
this was one of the more resilient things. Even just a couple
mhm.
weeks ago, it's like not
Right,
that bad, when things were starting to fall apart, and
right,
you could sort of wink and look at it, squint at it and see something positive.
right.
Clearly not now. Yeah, and the RS line has been doing fine there. So that's just something to note. It's just that we're seeing broader weakness, and again, you're seeing more weakness in defensive names at
Mhm.
times. It's just there's no real safe havens. It feels like.
Yeah. Okay, well, let's take a look at a couple of notable stocks. Here's a great example, Ed, right? Investors may have thought Verizon, this would be a safe place to hide, but wow, down almost 7% today.
Yeah, and this one had some negative news. They basically
Right.
warned on
It
the
was
first
on
quarter,
news.
so it wasn't just like, "Oh, defensive stock, I'm running away," but that always can happen.
There's
I mean, it's not.
yeah. When you go into stocks like this, you do it because, the risk or the odds of a big move down is lower.
Yeah.
So that kinda negated that today.
Yeah, and it's like in doing that, going, and so it had broken out on Friday, and then it was getting up there, toward the top of the buy zone, and it just fell back here. And so it's not broken, but you know, that's you still have risk with these names. And there's other names like McDonald's, just to show that's another down name. I don't think there was any news on this, but look how this one
Mhm.
broke out on Friday, and now it's below. Again, it's not broken. It could bounce back, but I don't know, isn't cash better than that? I mean, it just
Right.
feels like and if the
Why take
market
on the
does take
risk?
off,
Yeah.
yeah, if the market does take off, will these stocks just lag anyway?
Mm.
So that's just something on Verizon. Again, you can always have bad news on a company. It may, and so it's just something. It's just unfortunate. You feel like everything's safe, and then it's not. So if you do dabble in this because you just can't help yourself, just remember it. Just like keep it real small, and cash is still king.
A great reminder there, Ed. Okay, let's check out gold. This is typically that flight to safety area. So, this was one that worked today and has been holding up really well in recent months. AEM, Agnico Eagle Mines, up 3.7% on the day, closing just above that century mark.
Yeah, I mean, this has the recipe for gold right now. A lot of uncertainty and a weaker dollar. Those are just like, that's just catnip for gold investors. And so, yeah, and this one, that's been falling so much.
The
But
dollar,
that is
yeah.
something. You could whipsaw something. I mean, again, it depends on how things go. But I think a lot of people expected that tariffs would mean higher dollar, and,
Mm.
and it could maybe against certain things, but it hasn't right now. So there's that. There's a 101.45 3 weeks tight buy point of just modestly above this prior base. I think you could have used the 100 level, both because it's the round number and you get above the bulk of this 3 weeks tight. So you could have used that. Again, it's just like anything else. This could whipsaw. If you got economic news or
Right.
various headlines, you really could see gold go into a pretty big downtrend. So I just want to make sure that it's safe until it's not.
Yeah.
But this one has done quite well.
Hmm. And GDX, that's the gold miner ETF, up 3.2% on the day, a little more volatile here. AEM, of course, with that 3 weeks tight, this with a handle that had developed. And then GLD, the gold ETF, up 1.2% on the day. Not much of a pullback that we got in gold there, fighting support roughly around that 21-day line and continuing its upward move here, Ed. Okay, let's next go to TW. This had a blue dot today on the chart here. Ed, before the stock even is hitting a new price high and shares up 1.7% on the day.
Yeah, and about a week and a half ago, it sort of cleared, sort of like a quasi handle or almost handle. Didn't really work. It sort of came back,
Mhm.
but the relative strength line didn't fall apart. There are so it's in pretty good position here, and we've seen some other exchange stocks do quite well, or at least hold up, are right in buy zones or near buy zones. So this is an area. I mean, the volatility is probably helping things. You're probably just seeing more trading going on, and that's good for these market. This is like electronic bond trading, basically, and the traffic has been and the volumes have been pretty good. Again, you could play this. There's just the risk. You saw how it came off. So if the market really sells off, or if the market calms down, like if we just sort of calm down, this could do things. And so it's just that things are in flux. When you're buying something on volatility, well, that
Mm.
volatility will probably at some point wane. But good fundamentals. It's near a buy point. RS line is strong, so this is definitely one that investors should be looking at as well.
Mm-hmm. All right, Ed. Well, earnings season has pretty much petered out. Maybe a couple more reports this week. Anything after the close today or throughout the week that we should be keeping in mind on the
Uh,
earnings front or other news headlines?
There's a few that are out there, but a lot of them aren't necessarily in position. It's not the same. I mean, so many things are broken. It's not like, oh boy, this is something and go. So it'll be interesting to see. I think the CPI report will be important tomorrow. I
Mhm.
want to see if the Fed has room to cut rates. That's something. And then, so that'll be, uh, down the road. So, but I think that earnings are definitely taking more of a backseat now.
Yeah, they are, but hey, they'll be ramping up again before we know it in just a
I
couple
know.
weeks. So all right. Well, thank you so much, Ed. We appreciate it as always. And thank you, everyone, for tuning in. That is it from us for today, but it's Tuesday. So make sure live at 5 p.m. Eastern, you tune into our Swing Trader Status Update show to get a swing trader's perspective on the market with our very own Mike Webster and Justin Nielsen. So they will see you then at 5 o'clock Eastern. And we'll see you tomorrow morning on IBD Live, investors.com// IBD Live for all the details on that. So we'll see you tomorrow morning, and we'll see you right back here tomorrow after the close.